Here's the stock market short-term view with our daily cycle analysis. For those of you that are just watching this clip, and you just happen to be watching it on YouTube, we just did a real important piece that you should watch, looking at 7 different charts that have indicated that the corrective period in the stock market that we looked for might have come and gone. And we're definitely not correct as far as that goes. We just showed what we thought happened, and I want you to go back and watch that video, the whole market week video, to get a good picture on that. What I want to show you right now, and I'm going to move off of Tesla and into SPX and go to the daily chart. So for those of you that are brand new and not familiar with our style of analysis, what I want to show you in here is the cycle analysis. Cycle analysis gives you the rhythms or the heartbeat in the market. It is rare that you see something as textbook as you see here in the S&P 500, where you have these cycles, the dominant one right in here, which is about 20 days. It's actually an average because this is the ideal, but you can see in here that this was 19, 21, 21, 19, 23. It varies. The principle of variance talks about it varying, and that when you get into the final period in here where kind of the really short-term traders and the next swing trader types start to liquidate, then you get into these yellow zones and you get these corrective periods that you see in each of these. We had looked for this period right in here or this period right in here to align with intermediate corrections. However, they rallied too far and the configurations were too strong for that to happen. On top of that, the slim ribbon, which is the best momentum indicator you will ever see, has stayed green or positive through this entire time period. That's reflected right in here in the slim ribbon PO, which is the signal indicator for the slim ribbon. And you can see as each of these cycles bottomed right in here, it turned positive and positive and positive. And it continued to give you the sense that momentum was continuing on the upside. On top of that, as you could see right in here, it has followed that channel up just unbelievably as each of these corrective periods hit support, and then the magnitude of the advance is just fantastic off of each of these lows. What's important about that is that in these complex structures that we show in here is that they move right up into the upper channels, as you see right over here. And when it does that, the threat of breaking below the key low, which would give you the breakdown and give you a sense for a market top, it was never got close to it, because in the first few days it blasts off on the upside. That happened in this cycle right over here that we are seeing right now as it moves up towards this area. Last week we talked about, when we showed the SPY, that we thought this week it would start to move towards the 452 to 457 area, and it got, of course, right into that zone. So it's continued to follow this upward momentum. Again, we're looking at this yellow zone out over here, and that when it gets into there, it's likely to get a drop. Again, here's your supports right now based on where the market is right now. We'll just call it 44.77 down to about the bottom of that, about 44.35. The expectation would be that it gets into there. You'll note that almost every one of the declines breaks below the slim ribbon, but it has not been giving you negative momentum indicators. So in this case, again, you would expect it to break below the slim ribbon and get into this support zone. It would have to get below 44.0580 to give you an indication of an intermediate peak. What's the probabilities of that all the way down over there? That's pretty low to get down there. Now, it could happen, and were that to happen, it would set up trouble. But again, we were looking for intermediate correction in here, and the likelihood of that is very small when you look at this right now, because again, we're following those very, very strong upward trends, those very strong configurations or translations as we call them. And for those of you that are a student of cycle analysis, the translation is how far into the cycle does it actually peak. And when it peaks way on the right side, it's called a right-hand translation. And you can see right now we're already on the right side of this cycle over here. So it's remaining in a positive configuration, positive momentum, as you see, and the likelihood of any huge correction is small. Again, the likelihood of coming down below the slim ribbon under that 44.77 area out into this time frame that we were originally looking at. Now the time frame did not change. Into that mid-September, into week 2 to week 3 is where we expect that correction to come. We still think it's going to come, and the question is, can it be severe enough to call a market peak here? The odds of that have been sharply reduced, and just as I talked about in that important piece I want you to see, whether the correction already came and went, well, we think it did. The important thing is to look at that and to say, yes, there's a lot of indications that now we have to wait for the shorter term patterns in the stock market to tell us that there is a peak, and it's going to take some pretty severe declines for that to happen. And right now, there's essentially no selling in the market coming in at all. As I said in the beginning of the show, rising prices are fueling rising prices. And we are at just historic levels of valuations. We have a massive amount of supply of stock coming on. I talked about that in the beginning of the show. And all of that is going to bring very, very big volatility in the market ahead. So despite the fact that now the analysis has changed some, it doesn't change the overall big picture of the risks that we still think will come in the market moving forward. Right now, it's very healthy, and you have to wait for the market to tell you that it's not. And that's what we're going to do. We're always going to bring you the highest probability, as I think we've done in this show.